Welcome everybody to this session of Tax Life. I'm Jeffrey White, and I am your host, your trainer, your coach for this lesson. Okay, this session's topic: how the rich avoid paying taxes. Right. So I want to start by telling you a little story. Right. Last week I was in the barbershop getting a haircut, and some guys were talking back and forth. You know how guys talk in the barbershop, right? And they talk about sports, they talk about religion, they talk about women, they talk about finance, all kinds of topics. Well, in this particular last week when I was in the barbershop, this particular time they were talking about taxes, right? And no one in the barbershop really knew me other than the barbers, and only my barber actually knows that I'm a tax professional, tax strategist, because I do his taxes. But the topic that day was taxes, and I knew this statement was going to come up at some point in time because I was just listening. I really wasn't prepared. I really wasn't participating in the conversation, but I knew the statement was going to come up. The rich don't pay taxes, right? And if I've had a dollar for every time that I've heard that over, like, I don't know, a million times, I'd be a millionaire twice over. If I've heard that saying 30 times or 30 years, how many times I've heard that saying. But the truth is the rich do pay taxes. The thing about it is the rich don't overpay their taxes. All right. And the thing that makes it different is people think they cheat. They don't cheat. They don't hide their money. They don't put their money in offshore bank accounts or anything like that. They don't run from the IRS. The truth is that they plan their tax life, and they avoid overpaying taxes by living their tax life differently. Meanwhile, the average taxpayer, let's call them a tax filer, they do it differently. They only talk to the tax preparer once a year, and they come in there and they hope for a refund, and they don't pay any attention to their taxes. In this session, I'm going to give you and break down how the rich avoid overpaying their taxes. Okay, I'm going to give you 5 proven strategies that they use all the time to pay less taxes, and I'm going to show you how you can use these same strategies to live your tax life differently, and pay less taxes. Stick with me to the end because I have a bonus for you. And the bonus is going to show you 5 tax habits that the rich use as well. And the strategies that I give you are only applicable because the rich have these habits, and you can have and build these habits too. Okay? So let's get started. I want to show you what I think is where the gap begins. And the gap is an informational gap. The gap is an educational gap. The gap is an informational gap. And it's between what I call tax filers and tax planners. Okay? Tax filers are your average taxpayer. They're W-2 income earners. They make wages, and they have taxes come out of their check automatically after every check. Typically, they only think about taxes once a year, and when they get a refund or when they don't have to pay a big tax bill, they feel relief. Not realizing that that refund that they got was actually, in a lot of cases, their own money coming back to them, and they've let the government have that money for a year interest free. Now you want to compare that to the rich, and I call them tax planners. The rich own businesses. They invest in investment property. They invest in the stock market. Okay, the rich design their income and deductions way before the year ends. As a matter of fact, they design their income and deductions and work with tax professionals all year long. They design, they build, they execute, they reassess all year long, and they use the tax code to work in their favor to save them taxes. All right, legally. All right. So that's the difference. The big difference is that gap we talked about. Tax filers are reactive, whereas tax planners are proactive. Tax filers, they prepare their taxes. Tax planners, they design their taxes. And design beats preparation and reaction every single time. All right. So, how does this happen? How do the rich avoid overpaying taxes or avoid paying taxes at all? They do it differently, and this is how. I'm going to name you 5 strategies that they use consistently to pay less taxes. Okay. First one, business ownership. This is strategy number 1. Let's be real. W-2 earners, they don't have many tax strategies that work for them. They pay the most in taxes per capita, and they're hit the hardest, period, point blank. Whereas the rich, well, they own businesses, okay? They can now use those businesses to deduct things like travel and advertisements and office supplies and home office deduction and even part of their cell phone bill. And they do this every year strategically, okay? The magic here is that you don't have to be rich to use these same strategies and get the same type of results, okay? Even a small business, a small side business that you start can provide you with thousands of dollars in tax savings. All right, number 2 strategy, entities, the legal business formations that the rich use, okay? They use LLCs, they use S corporations, they use C corporations. Why? Because a lot of times they can split income and they can take a portion of their income in salary and then another portion in distributions. That means that they can lower the payroll taxes, thus having more write-offs, thus lowering their tax bill. I'll give you an example. We have a client, her name is Lisa, right? When she first came to us, she was a solo single member LLC. Once we did an analysis of her situation, put a plan together, we moved and requested that she become an S corporation. Okay, immediately, because she was meeting certain income thresholds, she was now able to take a portion of that income that she made from the business as salary, a reasonable salary, and then she took and takes the rest as distributions. And she legally saves thousands every year just by making that one entity change. Okay. Strategy number 3, real estate and depreciation. And if you want to add cost segregation to that, you can do that as well. Okay. This is one of the most powerful strategies that the rich use to avoid paying taxes altogether. Real estate, when you think about it and you're a real estate investor, I want you to think that it's not, well, in some people's mind, it's initially how they sell you on investment real estate that you'll make passive income through rental and rental income. But in reality, the rich know that it's really not about the checks that you might get from rental income. It's about depreciation and cost segregation. Okay. Did you know that you can write off a part of your investment property every year for 27 plus years? And even though you're getting a depreciation deduction on that property, the property could probably and probably is increasing in value in the market. Okay. So you're getting a deduction on one hand and then getting appreciation of that property's value on the marketplace. So when you sell, you've got a capital gain built in. Okay. Um, I have a client I hope she doesn't mind me telling the story, but she came to us a few years ago as a tax preparation client, and after multiple conversations, honestly, we had a meeting of the minds, and she became a tax planning client. Her name is Maria. Maria came to us and said, "Hey, look, I'm about to buy my first house. I want to buy my first house. What do you think? How you think I should do it?" And we discussed that with her. We came up with the idea and the strategy of, if this is going to be your first home, but starter home, let's buy something that is within your range and within your budget, and let's keep it, and maybe even a fixer upper. And as a matter of fact, it was a fixer upper. The cool thing about it was that the fixer upper was a duplex. Okay, and we nudged her to get the duplex. She got the duplex. She lived on one side. She subsequently have moved and rinsed the whole thing out, but she lived about 3 years on one side while fixing it up, and she rented out the other side to one of her co-workers named Michael, right? So every single year, as she was buying the property initially and fixing up both sides of the unit, both units, she was able to take expenses, expense deductions for all the repairs, plus the depreciation, and she was getting rental income from Michael. Okay, just by that one strategy alone, she became a homeowner, but she also became a real estate investor, which allowed her to now capitalize on some strategies that are typically for the rich. Okay, but even though she wasn't rich and isn't rich, she was able to capitalize on that strategy just by being aligned with a tax plan and what she wanted for the future. And she's saving thousands of dollars every year. She still has the rental property. She subsequently have moved into a single family home, well, not by herself, with her children, um, but saving thousands of dollars every year. Okay. Strategy number 4: put your kids on payroll. Okay. Rich families employ their kids in their businesses all the time. As a matter of fact, some cultures employ their children and kids in their family businesses all the time. Okay. The beauty of that is that the wages that you pay your children shift your income into lower tax brackets. Okay, because the amounts are lower. Then that same money that you pay your children, you can actually use to create and fund Roth IRAs and pay for actual real life expenses at the same time. All right. Another client of ours, David. Another client of ours, David. 2 children. He employs them in his lawn care business. They work after school and weekends, and he pays them $12,000 a year, total of $24,000. So now David is able to get the help he needs in his lawn care business. That's one benefit. Then he's able to teach his children work ethic. That's another benefit. And besides that, he's able to reduce his taxable income by $24,000 that he pays his children. That's another benefit. Okay. And then the money that he pays his children, some of it's going toward savings, some of it's going toward um, tithing and offering, some of it's going to retirement accounts, and then some of it is going to pay for real life expenses like uh, football and track. These things cost money, and now the kids are paying for that with the money that they get paid for working in their family business. Beautiful, beautiful strategy. Okay, the income that would typically be taxed if David kept that money in the business now goes and provides income. It provides a tax savings. It has multiple benefits for the children and for David. He typically would have kept that as profit or paid it to some people that he didn't know and wouldn't get those extra benefits of that strategy. So kids on payroll. Okay, the fifth strategy, strategic investing. Okay, so the rich, they don't invest in the hot stocks or the latest trends. They put their money in investments that the tax code rewards them for. Okay, investments like retirement accounts, uh, municipal bonds, health savings accounts, energy credits, and all these investments either do one or two things. In some cases, they reduce their taxable income down, and in other cases, they also provide um, credits for investing in certain type of investments, and also they get capital gains on some of these investments as well. Okay, the thing I want you to note here is that every single dollar that the rich invest strategically has a job, and that job is for that money to make more money. Okay, it's very purposeful in what they're doing. All right, so in this session, I want to talk about our immutable law, our immutable principle. Okay, and this is called the principle of tax design. Okay, and it's a big principle because I want you to understand that that gap I talked about between the tax filer and the tax planner, it's is is really about a mindset. Okay, and in this principle, the principle of tax design, the mindset is you got to think this, and then you got to believe this, that the tax code that we are all underneath is not there to punish you. Okay, it's there actually to reward those who align themselves with it. Okay, it's actually a guide that, excuse me, will allow you to live a better tax life and fund your goals and your dreams. Okay, our government wants housing. Our government wants us meaning the public and business owners and real estate investors and taxpayers. They want us to provide the things that make our society one of the best that there is, if not the best. Okay. And they want jobs created, and they want investment in markets. Okay. Rich people, they provide these things, and the tax code rewards them for that. Okay. The strategies that I've talked about, those these five strategies, they're all within the tax code, and they're all written within the tax code. The thing about it is the difference is rich rich people, either they know the tax code themselves or they hire somebody to know the tax code. The average taxpayer, the tax filers I call them, they don't know the tax code. Our job here at Tax Life, my mission is to provide the the attention to the issue, the gap, okay, that informational gap, that educational gap, that tax knowledge gap, if you will, and to promote a transformation of that mindset from tax filer to tax planner, okay? And I and my team and I at the Tax Life, we're gonna be promoting this thing till I cannot promote it anymore. And we're gonna keep creating these live sessions, and we'll be doing the best that we can. And we're gonna keep creating the YouTube post and channel, and I know that this is my mission, my purpose is to put this word out there that there's a better way. Yeah, tax preparation is compliant, and we're doing what we're asked to do, but tax planning is better. It's more comprehensive, and who doesn't want better? Okay, now the bonus that I told you I would give you. Okay, these are 5 tax habits that the rich use in conjunction with the strategies, okay? And when we talk about the habits, the strategies only work because the rich have these tax habits and use them consistently, okay? The cool thing about this is these habits that I'm about to show you, you can actually start to build these habits as well, all right? All right, the number one tax habit that the rich use is quarterly check-ins. All right, and when I mean by quarterly check-ins, they do this themselves, and they do this with their tax professionals. But every quarter, they're looking over their plan, they're reviewing their plan, they're assessing what did we say we were going to do, and are we doing those things? Are we keeping the records? Right? Are we documenting what we said we were going to do properly? Okay. Are we holding on to receipts? Are we writing down in journals, making sure that we document um, things like our travel and our expenses that we incur while we're traveling? Okay. They do this quarterly. All right. They don't wait till April and then go to their tax preparer with their hair on fire. All right. Number two tax habit, entity alignment. Okay, we talked about entities as one of the strategies, right? In that example that I gave you when we talked about moving my client from an LLC to an S corporation, that's an example of entity alignment. Her income had gone up, and it had gone up to a point in time where the LLC structure that she had as a single member LLC wasn't serving her from a tax strategy standpoint. So the movement or the adjustment or the alignment of that entity from single member LLC to S corporation, as her income adjusted, so does the entity, and it aligns with the adjustment of the income. In this case, the adjustment was up. Okay, the number three tax habit, expense tracking. Okay, and this kind of goes along with the quarterly check-ins. Okay, the rich are meticulous about expensing their they're tracking their expenses, and they're meticulous about it because they use the tax code and they push the envelope. They're not afraid to ask questions and see if something that they're doing is able to be expensed. And then if it is determined that it is, then they track it well. Okay, no proof, no deduction in the IRS's eyes, period. Okay. Number four, tax habit. We go back to strategic investing again, okay? And we talk about every investment dollar has a job to do. Every investment dollar has a purpose. Their job and that purpose is to make more investment dollars. All right. And the the investments that they make are strategic and thought out and planned out and researched, and not a hot tip that they got from Uncle Joe in the basement. Okay. The fifth tax habit that the rich employ is tax team. I call it tax team building. Okay. Now, most taxpayers at some point in time in their life, on the taxpayer, what we call the taxpayer evolutionary journey, yeah, they don't all start out as tax planners. You might start out as a tax filer and then move your way up the evolutionary journey. Okay. But what the rich do is if they're not at a planning stage yet, they will put a team together that knows planning and are strategic, and guides them all the way to where they become and move up that journey to become a planner themselves. Okay. They don't go it alone, and they treat their advisors like coaches and not emergency fixers. Okay. The rich live their tax life a little different because they live it all year long, not just once a year. Okay. Their tax life is more relational, whereas a tax filer, which is the average taxpayer, which might even be you, live their tax life once a year and reactive. The rich, they live their tax life throughout the year, intentional, and that's why they may sleep better. Okay, so this session, it gave you 5 strategic um, ways or strategies that the rich use. We've also given you 5 tax habits that the rich use in conjunction to be able to execute the strategies. Okay. The thing I want everyone that's watching to understand and know is that um, it's there for you. Okay. And we don't have to live a unintentional tax life. I say all this, and this is important because I've been in the tax profession for 30 plus years. And even I myself have gone from being a tax filer, okay, to a tax planner. I'm actually a tax strategist, okay. Now, I don't think it would take you 30 years to do that, all right? But I'm here for you, and we're here for you, and that's what these sessions are all about, okay? The thing I want to talk about is that the rich, they they do have an advantage. The tax laws are written to benefit them because they're aligned. The cool thing about it is, this is really cool. You don't have to be rich to use these strategies. You don't have to be rich to build these habits in your life. Okay. And the opportunity to start employing these strategies and these learning and building these habits are now. Okay. The rich, they avoid their taxes legally for the most part. Every now and then you hear about a tax cheat. Okay. What we do hear in the news a lot is that the rich don't pay taxes. What we don't hear is how they don't pay taxes. Okay. And why they don't pay taxes, we don't even hear even less. And as a matter of fact, I'm going to give a session later on about why they believe um, that it's okay and that's a good thing to pay less in taxes. Okay. But they avoid overpaying their taxes strategically. Okay. Again, tax filers are reactive and tax planners are proactive. So let's reassess and let's go back in conclusion. All right. These are the 5 strategies the rich use to avoid paying taxes: business ownership, entities, real estate investing, kids on payroll, and strategic investing. 5. All right. The 5 tax habits they have in order to use the strategies are quarterly check-ins, expense tracking, strategic investing, entity alignment, and tax team building. Okay? I want you to remember these things and understand that it's never too late to start to live a tax life. And remember, a lot of these principles, these strategies, these tactics, these habits are interchangeable in other areas of our lives. And I know we live more lives than just our tax life, but our tax life affects all the other areas of our lives, all the other lives that we have, because the taxes deal directly with the one thing that affects most other areas of our life, or much more of the other lives that we have, which is money. Okay. Remember, money's just a tool, but um, you can do a lot of things if you have the right tools. You can build a lot of things with the right tools. Okay. So, action item for you this week. Okay. If you've identified yourself as the average taxpayer, right? And what we call a tax filer, and you just go to the tax person you go to once a year, call them every now and then when they got a problem, okay, and you need help with, I want you to commit to, before this year is up, whenever you see this video, will probably be before this year is up, okay, and go and talk to your tax professional, a tax professional, about planning, not just preparation. If that tax professional that you talk to doesn't know about planning, don't hold it against him or her, because I was there once, okay? And I've, like I said, been a tax professional for 30 years. But what you want them to do, especially if you have a relationship with them in some way, is know and learn about tax planning, okay? I want you to do that this week, okay? And look, I'll give you before the end of the year, okay? All right. So if you've gotten any value out of this session, I want you to hit the like button, okay? This is new to me. Hit the subscribe to the channel, okay? And then drop the word rich in the comments, all right? If you're ready to stop overpaying your taxes and start living a different tax life where your money works for you and it just doesn't flow to the IRS, then let's go. Let's do this thing. Join me on this mission, okay? And watch the channel. Watch the live sessions. It's all free information. I got an ebook coming out. I got a newsletter coming out. Tax Life is going to be proliferating the airways. Okay. Thank you so much for watching. This is Jeffrey White, as always, asking you, what's your dream?